Welcome to another wonderful Wednesday. Let Lee Johnson get prepared because I was on another call before jumping into here. Good afternoon and welcome to another. Well, my glasses are a little bit crooked here as I'm seeing them. And welcome to another wonderful Wednesday. We have so much to talk about, so much that is just going on in the world of business, right? That I think that we could have a fruitful conversation today. One of the things that I noticed is that last week when we were an hour before the Federal Reserve was set to meet. And when they met, they actually kept the federal funds rate between 4.25 and 4.5%. And as business owners, we have a need for working capital. However, a lot of people don't really understand what the Fed funds rate is, right? They see it, it's a headline type of number. But I just had like a cursory conversation with different people, and I had to explain to them that the Fed funds rate is a short term overnight bank overnight rate that banks use for interbank lending. So I don't know if you guys have heard of treasury sweeps and things of that sort, but that's exactly what the Fed fund rate is for. Every night these banks are making loans to each other, and certain organizations every single night. A company, I remember when I was just out of college, I had a colleague who worked in the treasury department for our organization, and basically her entire job was to look for where we could get a higher rate in 24 hours, and she would orchestrate the movement of monies from one area to another area to another bank. And that was her entire function. As I knew what her job was, I would have never, imagined that that was a job that someone would have as a full-time professional. But, little did I know, but we were looking at the Fed's funds rate from the perspective of being an active real estate investor. Nothing happens in the real estate realm without some debt being placed on the asset, whether that debt is going to be from a traditional funding source or that debt is going to be from a private lender or a hard money lender. The conversation is always there as to, well, what is the interest rate going to be that I am paying, because money always has a cost, right? So, for those of us who are in this space and having this conversation, what is the Fed funds rate? How does it impact the economy? Because as a small business owner, you need access to working capital in order to be able to support your business, right? And early last week, I was having a conversation with a client who's a veteran in the state of Virginia. And we were talking about, well, how was he going to fund his business? Of course, since it is a startup business, he was going to be leveraging access to personal resources. Now, most businesses are leveraging access to their personal resources, but the real conversation is that that should be a short term solution to the problem. The bigger conversation, the bigger question should be how you're going to be able to build up your business credit to the point where whenever the business has a funding need, the business will be able to use your EIN number, right, in order to be able to apply for credit, right? One of the things that I have learned over the years is that when you are applying for credit and you're trying to apply for credit underneath the business, the last thing that you should do is put your social security number on that application, right? If there is a spot where you are being requested of your social security number, the best thing that you can do is leave that blank. Let me repeat that. The best thing that you can do as a small business owner is leave that blank and only use your EIN number, right, in the application for credit from that entity. Now, if you're sitting across from a person and they're telling you, oh, we cannot process your application without your social security number, I would tell you to tell them that no, you're going to run this application without my social security number. And you may be asking, well, Lee, what if they refuse to? No, just you got to use your networking skills in order to be able to persuade them, right? To persuade them that this is the right thing for them to do, and they will be able to run and execute that application. The reason why you don't want to use your social security number is because in this space, there's something that we want to talk about is the personal guarantee, right? Or for t- for sh- for terms, people say PG, right? If you hear the term PG, PG is just a short-term acronym for personal guarantee, right? In the business, it's a separate entity from you as an individual. It should be standalone. Everything about the entity is standing all on its own. It should not affect you as an individual, right? There's a couple of reasons why you want that is because on the personal side, there is a lot of legislation that is there, mainly the Fair Credit Reporting Act, that demands what happens when it comes to your personal credit profile, right? So you have the Fair Credit Reporting Act that is somewhat like an overseer of all things, an overlord to say, well, this is how the rules of the road must go. When it comes to building out your business credit, there are no rules, there are different rules, and that's the reason why the fundability platform was created, because it takes something that doesn't have any rules. And what it does is it gives you a system that you can use in order to be able to build out your corporate credit profile. And in doing so, you will have there's confidence and then there's high confidence. That's something that they use in the intelligence space. And when a piece of intelligence has high confidence, there is a number of people who are agreeing that the information that is being shared there is all is all valid, all good stuff for you at the same time. So if you want to go forward in building out your corporate credit profile, there's two things that you want to be concerned about is you want to make sure that you're not using your social security number on that application. But before you even start to apply for credit underneath your entity, you want to make sure that you have basically dotted your I's and crossed your T's in order to make sure that you have increased your approval capability is the word that I'm going to use, because you want to make sure that, hey, all of the items that I need to have checked off have been checked off. And if you may not notice, there are about 125 data points where the fundability platform helps walk you through ensuring that those bits and pieces are accurate and correct across the various sources. So when you go and you create your entity, Most entities, if you're doing this for yourself or if you're using a third party, start out with creating the entity in a particular state, right? So you create your entity in that particular state. As you're creating your entity, you have a street location, etc., where all of that information must be similar, not similar, the same as where you go and you apply for your EIN number. That's going to be on the website for irs.gov. It must match 100% exactly. So, for instance, if you have a suite number, right, but you also have a street number, if on your state application you abbreviate street versus spelling it out, so you're using ST versus STREET, right? That same registration needs to be the same registration that you're using, right, to apply for your EIN number. Even if you have a suite number and you are not spelling out suite, you're using STE versus spelling it out SUITE, that needs to be used exactly the same as you are applying for your EIN number, right? And the next piece of that is when you go to create your bank account is also using the exact same information spelled exactly the same that you've used to apply for your state corporation commission, similar to what I'm using in Virginia, as what you have used to apply for everything with the IRS. And also the same is going to be applying for what you're doing um, with your bank account. But you may not know this, but that is really only step 3 of 7, right? At a higher level, you got step number 4, where you go to Dun and Bradstreet and you apply for your DUNS number, right? Your DUNS number is going to be critical because your DUNS number is going to be very impactful because Dun and Bradstreet is the granddaddy of all credit corporate credit reporting agencies, so CCRA, right? And that is what you're going to be using to create your trade experiences, right? So you have to have a number of trade experiences, and those are the things that are going to be in your corporate credit profile, just the same, right? And then once you have that DUNS number, and you start reporting those trade experiences, right? That's how you start building out your journey from level 1 to level 2. Level 1 is when you have 3 trade lines or trade lines reporting. And that can be across the 3 different credit reporting agencies. So the major credit reporting agencies are Dun and Bradstreet, Experience Business, and Equifax Business. All the same, right? You have to go through this methodically and build that out. And to be perfectly honest with you, my experience when we were creating value investment partners was that there was no one that would be able to sit down and explain, go through step 1, go through step 2, go through step 3. We were reading the book and trying to basically bake that cake using the recipe that was in that book. But one, the book was a little bit dated and things had changed just a bit. But even though we thought that we were in a position of having done it all correctly, there were a couple of missing pieces, right? That we didn't know. We didn't really have the same conversation with a bunch of other small business owners because guess what? It's a little bit taboo to have conversations about money with people who you don't know, right? So it's a little bit taboo for you to go up to your colleague and say, "Hey, Do you tell me what your paydex score is, right? That's almost similar to you meeting someone off the street and you're going to that person and saying, "Hey, tell me what your FICO score is." Right? That's a look. Well, it's rude for me, and I don't know if it's going to be rude for you, but it's rude for me to go up to someone and say, "Hey, tell me this, tell me that, or tell me the other." So I wouldn't necessarily do that. Um, as I have already said on this platform, right? Um, it took us about 5 years to get this right. Now we know what our different scores are across Dun and Bradstreet, which is the Paydex score, right? And I believe for Experian, and I think it's Experian or it could be Equifax, one is the Intella score, right? All of those things have to be known. And I believe it's going to set you up with a high level of confidence that when you are going to a funding source, a funding provider, you just have a different level of confidence when you know that you know what your corporate credit profile is saying, but more so than anything else, you can have confidence in knowing that when you apply for credit, that you've just increased the chances that you're going to be approved, right? Because you've covered the bases. It's not like, you're running into this dark thing and you have your eyes covered and you don't know what you don't know, right? The reason why we created Value Investment Partners Business Credit was because we were having so many conversations with many different business owners that we were working with to set up their going concern, set up their entity, right? And they just thought that if we make it through step three, that we were all set. Everything that we needed was going to be there. So many people would tell me, "Hey, I have my EIN number. I'm all set and I'm ready to go." And that's when I had to say, "Oh, no, 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 no. From what we've learned, there are other bits and pieces that you need to have besides just creating that EIN number and building out that bank account, right? There are other bits and pieces around what you should have inside of that bank account, right? You got low, mid, and high fives. That's you have 5 digits inside of that account, and that's where you should be. But, if you're just starting out, it would be good to have, a high or medium or a low threes, right? So that means that, sorry, low fours, that means that you have 4 digits reporting in your account. So $1,000 all the way up to 999 $9,999 in that account. That's going to be your high four, right? And those are other things that, depending on where you are in the conversations that you're having, those are things that is very difficult to find out all on your own. So the reason why we created Value Investment Partners or VIP Business Credit was so that what we could do is we could help you to accelerate you getting access to funding for your business. For example, why well, let's take a step back and realize that once you have created your business, you are running against time. Just because if you look at the data, the data will tell you that it's somewhere north of 50% of businesses do not make it to their fifth year, right? And why is that? Right? 50% of businesses do not make it to their fifth year because they do not have access to capital, right? Revenues, when you are a business owner, have ebbs and flows, ebbs and flows. There could be months where you're bringing in 10, 20, 30, $40,000, right? But there could also be months where you're bringing in a few $1,000s. When in those times when you are bringing in a few $1,000s, you still have your overhead and your fixed costs that still need to be paid. What are you going to do in those times? Right? It's very easy for you to say, Well, I have a $50,000 limit on my personal credit card. I'm just going to swipe that for this bill, right? I would advise you against doing that at all costs unless that is your last scenario that you have there, right? I would say it would be much better for you to understand how to build out your corporate credit profile for the business, right? And be able to have credit cards or access to lines of credit that are only in the name of your business. That would be the recommendation from Lee, right? You are an adult. Of course, you can do whatever it is that you feel is the optimal way to run your business. But as a business performance coach, the conversation that I'm having over and over and over with different small business owners is that they're going out of business because they have exhausted all of their personal finances and can't move on to the next level. So you're always going to have different times of what's going on. We started this conversation today with having a real detailed and intimate understanding of what is the Fed funds rate right now. When the Fed met last week, they did not move on interest rates, right? At this point in time, the Fed's funds rate, which is the overnight rate, is stuck at 4.25 to 4.5. Now, that's going to be the baseline number. Of course, you're probably going to have a number of that prime plus some other number. So you used to have LIBOR, right? But now you have SOFR, right? And then you're going to have some plus on top of that. Depending upon your risk and how you have been paying your bills, right? That's the deeper concern because the cost of that capital that you need in order to stay in business is going to get more and more expensive depending upon whether or not you have been paying off your bills in time. That's all that corporate credit is. It's this nebulous thing that is very elusive to many of us, but at the end of the day, it's making sure that your trade lines are reporting to the proper entities, right? So that's going to be Dun and Bradstreet. That's going to be uh, Experian Business and Equifax Business, right? The second piece, after you have assured that those vendors are reporting those trade experiences with the corporate credit agencies, is ensuring that you are paying them in time, right? If you're paying them on time, you're definitely going to have a paydex score that's probably greater than 80, 90, and 100. Just is the amount of time that you took in order to pay off that invoice. That's all that they're recording there. If we're going to, have this conversation at a very high level, that's what this conversation is. But, in 2016, 2017, when we set up Value Investment Partners, right, we were as lost as anybody. We thought that, hey, we would go over to the bank, we would build out a relationship with the vice president at that bank. And that's the reason why we love to use credit unions or community banks is you can literally build out that relationship and get access to financing. But if you have a new entity, that entity was just created yesterday, who in their right mind is going to give you access to thousands of dollars? Especially if you don't want to give a personal guarantee, because on the personal side, you have impacted your credit scores just the same. So just to be careful of, well, in life, you always have to be careful of who's providing you with information. One of the things that I could tell you is I I have been through the ropes of, setting up several different businesses, right? Many of those businesses are tied around real estate, right? So what we do is primarily coach folks who are setting up their business in the real estate space. But if I'm working with you at an entrepreneurial level, right? What's the difference between setting up an HVAC business versus setting up a real estate business versus setting up an auto detailing business, right? At the very beginning, there are some foundational things that that business needs. The foundational thing that that business needs is a business plan, right? The business plan needs to be well thought out. It needs to include how you're going to market, right? How you're going to bring in sales. All of those things have to be well documented inside of your business plan. And I say the reason why you want to have your business plan well thought out is because that is your roadmap, right? Right now, you might be in a high interest rate concern. Your business plan didn't account for that, right? Do you just stop being in business? I would rather say no. You've put a lot of blood, sweat, and tears into building this business. And because of that, you want to build out your business plan where you have thought about some of these known unknowns, right? Is a term that I use from my project management days, just the same. So we didn't have the beautiful Miss Eunice Johnson on today. She had a conflict on her schedule. So we've sent out all of the different communications to say that we were going to be going live today at 1 p.m. And I wanted to keep that promise to you, right? That we were going to be here. We were going to share a little bit of information about what we're doing as small business owners, right? In order to keep our business viable and share some of our advice and experience so that you could also be in a position where you are keeping your business viable. Our mission in doing all of this is to not have you be on the other side of one of those communications that goes out to your customers saying we are no longer in business or we are shutting down or going out of business sale. That's what we're trying to avoid by coming onto these various platforms and sharing these bits and pieces of information. Because one thing that we can tell you is that we don't know it all, that we have been through the school of hard knocks. But give us a call at uh, 571 That's the number for Value Investment Partners. But we also have different other businesses that we might be able to help you as well. VIP Business Credit is another one that we have, in the website for that is www.vipbizfunds.com, right? And you can reach out to us and we'll help you to, you know, start to see a little bit of light at the end of the tunnel. That's the one thing that I can assure you is that, hey, we've been through it, we have the experience. If you need assistance, right, just give us a call. We're happy to spend some time with you. The solution that we have found on the business credit side is a platform called Fundability. We are not only consumers of Fundability, but we believe it's such a great service that we are providing it to others just the same. So I don't have all of the enthusiasm that I had last week on our wonderful Wednesday. I'm dealing with a little bit of a back issue that's going on. I don't know. One of the troubles of growing older or being more mature, as certain people will say, is the fact that certain things start to hurt on your body and you don't know why. When we returned from Baltimore yesterday, I was doing just fine. I took a couple of calls before leaving my office, right? And all of a sudden, I woke up this morning and I had a sore back. But hey, I'm not going to allow that to stop me from doing what I had already planned for today. I have 3 additional meetings after this, and I'm pushing forward. So, with that being said, thank you. I hope that you are having a wonderful Wednesday of your own, right? I hope that you are finding something to be positive and optimistic about, right? You're not going to let whatever it is spoil your happiness overall. So I'm going to bid you a farewell until we do it again next Wednesday. Have a wonderful Wednesday, and I look forward to speaking to you